Great. Good morning and good afternoon or good evening, depending on where you're sitting on our globe. My name is Michael Filighera, and I am the owner and proprietor of TradeOutLoud.com and LogicalSignals.com. And today, my presentation is going to be more wrapped around three key factors in day trading. But first, let me just start with a little bit of history of who I am and where I've come from, what my background sits in. I started trading as an options market maker in 1979 on the Pacific Coast Options Exchange. And I have traded here in the US, in San Francisco. I've traded in the London traded options market. I've traded on the European Options Exchange in Amsterdam. I've also traded on the DTB in Germany. And before coming back to the United States, I lived in Amsterdam for 10 years, and I returned to the United States and went back to the PCX, the Pacific Exchange. When the market started to really slow down, as everything started to go more electronic, I decided to leave the floor and came up and set myself up at my home and continued to trade options. And I guess it was about 2013, again, when everything was going more algorithmic and the markets were changing, I sort of got a little bit tired of overnight volatility as it pertains to options. And so I decided then in 2013 that I would become a day trader of all things, and went through all my bumps and grinds and learned all some technique and some style and some different things. And so since 2013, I have been a day trader in the markets. And currently, what I'm also doing besides day trading is that I put together a daily update and based on Elliott Wave. So my analysis has always been based around Elliott Wave and Fibonacci. And I learned Elliott in 1988, 1989. And I started to publish it in the early 90s. And so I've been publishing since that time. And now I use YouTube, and I present a daily update on the S&P 500 and the NASDAQ 100, both their futures markets, Monday through Thursday. And then on Saturday, I do a weekly update. And then I include the cash markets and also the futures markets. I also have presented analysis on the precious metals, on the treasuries, and pretty much that's about it for current going through. I do sometimes, via some of the programs that David puts on, I will also put up Elliott, or just provide Fibonacci or Elliott on some individual stocks, on the programs that David produces, such as Analyze Your Trade. And then also the Crowd Forecast News. We talk about a lot of different things, and I'll throw up a chart on that. So what I want to discuss today, though, is, again, three key factors in day trading and becoming successful as a day trader. And I have found that there are many, many people that are trading for the long term, or they're in to get the bigger picture, or they're chasing the golden brass ring, or the brass ring, you might say, because they have a desire. They just want to make the money. And I think that there's been some serious changes in investing and serious changes in how and what motivates our markets to trade higher or lower. I don't believe that it truly is bullish or bearish anymore. I don't believe that it's solely based on, an earnings report or an economic number. And in fact, if we really pay close attention to when the PPI, the CPI, and unemployment and non-farm payrolls, when all of these figures come out that are supposed to give us guidance in terms of how healthy is our economy, how healthy is the market, how healthy are things moving forward, it seems that the reactions get smaller and smaller and smaller. And so I started to really kind of pay attention to, well, what does the market focus on? And then what we have seen happen over the last 10 years for certain, and likely longer, is the expansion of ETFs, electronic traded funds. The largest ones that we can just name off the top of our heads are going to be the spiders, the Qs, the SQs, the TQs. We have many different. We have the diamonds, and that's based on the Dow, IWM, which is based on the Russell 2000, and so then we've had additional ETFs created that can be single name. I have seen ETFs. They're listed as electronic traded funds, but it's an ETF on Nvidia, for example, which is an ultra long or an ultra short, and they use kind of strange little uh, uh, multipliers like 1.3, 1.4, 1.7, and so a lot of different things. And the deal is, it's like there are many, many different trading vehicles out there. And each one of them, particularly a lot of these ETFs and the derivatives of the ETF, so to speak, are really attracting very, very large sums of money, millions to almost billions of dollars. And then what happens after that? They all get options. So we have options on spiders. We have options on the Qs. We have options on the SQ, the TQ. We have options on the bonds. We have options on TLT. We have options on gold, silver, platinum. Everything you can think of, options do exist. And then they start to, when we really take a look at, it used to be that here we had an index. And then what they would describe as the derivative would be the options. And then we'd have an underlying, right, which could be an index or it could be a stock. And the derivatives were the options. And what I've noticed, and this one could be a little bit more difficult to try to understand or just accept, is that I don't think that the options are the derivatives anymore. I believe they're the underlying. And so what happens in the options flows affect the movement in the stock or the index. And so what we have is just kind of a change of game plan almost. So what I started to follow and what I've started to put together via a very excellent company that produces this information, and their models are great. And the name of the company is Spot Gamma. And the creator of Spot Gamma is brilliant, and the people that he has with him produce really quality models, and they're very, very good. Now, what's included within those is actually the options flows. So really what I'm looking at and what I'm basing a lot of my the movement on are the options flows. And so what's included in that? Well, we have different models that'll show us where a volatility trigger is. They'll show us where a call wall or a put wall is. And those change because they're all based on the options and how the options are trading and where things are being placed, where capital is being placed. So we have the capital flows, the options flows, and then the gamma. So, and really what we then can determine off of all of that is, are we in a positive gamma or a negative gamma type of, and I put quotes on this, atmosphere. So in other words, is the trade really being based off of negative gamma? And what I can really show you is this morning, and I got to go all the way down to a 5-minute chart and really open this up. This is what happened this morning coming into our opening. And primarily it occurred because of NVIDIA. And NVIDIA is, of course, the last stock that's going to be reporting tomorrow their earnings. So get this, one stock. Yes, it's a big stock. Yes, it's a up there in capitalization. And but what we're really looking at is that NVIDIA's earnings and how the market wants to interpret them and how the CEO wants to present them carries the weight almost 100% now of what is going to happen in our markets, whether we're going to go up, we're going to go create all new new all-time highs again, or are we going to start to head lower and produce what a lot of people are thinking and waiting for, which is a crash. Now, what would create that? Or why did we have this big drop down today? As markets dive into negative gamma. So you can have negative gammas when it breaks a volatility trigger. So there's other, also, let me just at this time interject something. Now, this could be difficult to try to understand, but once you get the gist of it, it's very easy to put together what's really going on. And the reason is, it's like if any of you trade options, you understand what the big question is like if you're trying to put on a spread and it's a little bit of a complex spread, then sometimes the big question that gets asked, what's the action? What's the action that I'm looking for if I put this spread on? What's the action from the market that I'm looking for if I'm buying a put spread? Or I'm just buying a put, or I'm just buying a call, or I'm putting on a call spread, or I'm putting on a calendar spread, or if I'm doing an iron condor, or if I'm putting on an iron butterfly, all the different things, or just a butterfly, all the different things that are options, positions, and combinations of different options. Those all translate down and out through. They produce gamma. And gamma is a reading that tells us, it's a Greek that tells us that for a $1 move in a particular stock, how much should that option move or shift? Now, here's the big point. Understand that calls produce positive gamma. Puts are negative gamma. Why? Because it's selling. So when you're selling something, if you're short, you're going to have negative gamma. Now, what's the action? So again, if we go through what say we have what we call a put wall. Usually what that put wall is going to do, it's providing support. If a market is dropping, it's providing support. Why? Because it's a whole bunch of short positions sitting right at that strike. And they're normally going to be puts. So it's a put wall. So what happens if that put wall is broken and the market continues to drop? Well, if you happen to be short the put, every time it drops more, you're getting longer. Your position gets longer. So you're losing and you're losing and you're losing more. So again, thinking back, what is the action? You buy a put. You want to hedge that put. What's the action? You buy the underlying, right? Because it's negative. So you buy positive to even it out. You sell a call. What is the hedge? You buy the underlying. If you're selling a call, you're selling the right to somebody else to come back to you and pay that strike price for 100 shares of that underlying. So if I'm short, and now let's take a look at the opposite, a call wall, which usually sits above the market. What's the function of the call wall? Well, again, it should provide resistance because there are large positions that are sitting short there. So what happens when we burst through that call wall? Well, the gamma starts to explode again, but it's exploding in the wrong direction. If you're already short and the market continues to go up, you get shorter. So the dealers or the holders of those options have to turn around and buy into strength. So you can see that there's some common things that people say about the market. You always want to be buying into weakness because you're looking for the turnaround, or you want to be selling into strength because you're going to get the better price. So when you have to start doing things opposite, the market will react. Now, this drive down today was basically just monetizing some things in NVIDIA, because NVIDIA was up prior to our opening. I think it was trading around 142. Then suddenly it's trading 140. And so they just started to drive it down because then they get their options and they get their prices down where they can start to monetize certain things. So it wasn't that suddenly the world just got bearish all of a sudden right then and there, because you see what the reaction was afterwards. They just started to buy it and they haven't stopped since. Now I can take this out and I can show you that Elliott Wave kind of caught it. Elliott Wave understood it. And let me go down to my hourly chart. So the other things that I use is Elliott. And as I left it last night during my update, I had this on the chart. 1, 2, 3. I didn't put the 4 there. And I actually had said, well, okay, we could have it to one of two ways. Either this ABC is done here, and then I'm going to put that 2 over here, and we're going to start to blast off. But this is where we were left. So this is the position. When I was making the update, the market had come up this way and started to peel back down. I said, but if this is done, and I'm going to go 1, 2, 1, 2, then what the market needs to do is absolutely take off and not stop. Just keep going. Because it's why it's falling into a third wave, longest and the strongest part of a 5-wave sequence. So it's going to keep going, but it didn't. And so I gave my alternate. So that was the alternate that it was going to just go. But the count that I'm using suggested that we're going to come back down, go below that low, finish this C wave down by putting in the 5th wave. And we got it. We got it perfectly. We needed to get below that low, which was 20,405, and we got it down to 20,382. And you see what happened at that bar? It hit that bottom and it turned and it went up and it didn't stop. Because the other thing that I said, according to what Elliott tells us, that if once wave 2 is done and wave 3 is going to start, wave 3 is the longest and the strongest. So I said on my update, I said the market, if it's going to finish and we're going to turn, it's going to put in a strong impulse-like move. Impulse up or impulse down, but it's just nonstop. That's what I'm talking about, impulsing, and forms 5 waves. So this is impulsing on the way back up. All right, so now I've laid some groundwork. So let's talk about the 3 key factors in day trading, because I don't day trade off of an hourly chart. I day trade off of, I actually can go over, and let me just stop this share and I'm going to go back and I'm just going to switch my screens and go over here. And so, yes, now you can see them. These are my trading screens. And this particular account that I'm using right here, this is part of what I do, because currently I do have a trade room. There's some changes coming up, which I'm going to try to leave myself enough time I can talk about those changes. But in my trade room, I help people get funding, right? Apex Trader Funding is a company that you go through their evaluation process. If you pass the evaluation, you get a performance account. And then if you're successful in the performance account, you can start taking money. And the money over, first you have to earn enough, like, oh, I think it's over $2,600. So you start with 50,000, you get to 50,600, you're allowed to take out some money. And then of course you continue to build. And they all have different things that they talk about on their requirements and stuff like that. But there are a lot of people that they want to day trade, but they might say, well, I've only got $5,000 to start. Is that going to work? It's like, well, you can get knocked out of the first futures market in about 10 minutes. So you need a larger amount of money to begin. And so this is a way that people can come in, they can earn it, and then really learn how to trade and keep going and start to build, and you can work. Yes, multiple intraday time frame analysis, yes. And so what we have now is a bunch of additional things. So again, 3 key factors in becoming a better day trader, or to just really to find some success in day trading. And trust me, there were periods today, I have to go back in here to open up this chart that to show you that right in there, this would have driven you crazy. Now, this is a 2-minute chart, but what that is just sideways and chop, or you can call it consolidation, or you can call it a market that truly doesn't understand or doesn't have any concept of really what it wants to do. And why? Well, there were a lot of different reasons on what was creating that. So let me just state these three factors before I run out of time. Um, the first one is having a trade plan. And so those are really the three key factors that kind of go in. Having a trade plan. And the first rule of your trade plan would be to, what is your trigger? What's going to trigger you into a buy or a sell? And so then you've got your tools that you're going to use. And part of it could be Elliott. Part of it could be moving averages. That's all these nice lines I have on my chart. And they're all the same on all the different charts in terms of the period. So like the yellow one is an 8 period. The blue one, you can see it right there, is the 20. The brownish one is the 50 period. So it's a 2-minute 50 period, which should match up, but not totally, you see, because the time frames are different, but the calculations are the same. So each one has an effect on this 2-minute chart. And then this magenta colored is the 200 period. Now, if you're looking on an hourly chart, the 200 period is still up at 20,816. But here on my 2-minute chart, it's at 20,632. Now, so that could be, you get a trigger that way. I use pivot points. And these are support levels that go along with that pivot point, and these are the resistance levels on upside, which go on with that pivot point, and they're also Fibonacci based. So that these are tools, these are helpful. I have an RSI, which gives me an inclination as to, is the market on a 2-minute or a 15-minute or a 5-minute screen, is it getting overbought or oversold? If it is, then I kind of look at like it's got to resolve that. It's got to just kind of relax a little bit if it's overbought, or start to rally again, stop selling and turn back into a rally. And so those are some of the tools that are going to maybe give you an indication, okay, I'm looking to buy, I'm looking to sell. That's my trigger. I'm going to put in my order. Second thing, what is your goal on the trade? Now, if you're a day trader and you're trading the NASDAQ is $5 per tick. The tick is 25 cents. The NASDAQ does not move in ticks. It moves in dollars. So you'll see these moves, they'll just kind of move in a 2-minute period. I got to pick out a good one. Here's a 2-minute period. Started at 20,563. And that 2-minute period was, then the next stop was 20,603. So you can see that's 50. 601 or 600, let's call it, and 66. So that is 46 points. 46 points at $20 a point. You can start to see, oh, what is the potential here? The potential is you could make a lot or you could lose a lot, and you can do it real fast. This is a 2-minute bar. Either you make or you can lose. So what do we have next? Well, we have what is the trigger? We have what's the goal? Well, I'm going to say most of the time as a day trader, I'm saying, well, my goal is usually minimum. I'm going to try to look for to make $100 on the trade. Now, if I'm going to scalp, I want to scalp for $100. If I'm going to try to position a little bit and let it run, if I'm thinking that, okay, we're breaking above a moving average, or say it breaks below this moving average, it probably should drop, or hopefully drop back down to 20,705. So there's it's 15. So that's $15. That, just 100, $200. So you know now you have a goal. Here's the third and really the most important, the one that most traders, new or old, tend to overlook or tend to sidestep. And that is, where will you get out of this trade if it becomes invalidated? And I'm going to tell you what the emotional things that goes on behind this. Many people take that, okay, I've got it all set up. I'm looking to buy it here. I'm looking for it to go up to here. And where's it going to get out? Well, if it goes down here. Somehow in our mindset, which is another key factor, somewhere within our mindset is that we take it as a negative. You're wrong. You're wrong. And that brings up a whole bunch of stuff inside of our minds. And a lot of it could be emotional. A lot of it could be from our past. Or a lot of it could just be like, I hate being wrong. And so they don't get out. The next thing a lot of people will use when they're going like a hope, a whim, and a prayer. That's what I call it. And it's a strange little phase that we can get into. Market's going to turn, it'll turn around, it's going to turn around. And so what they ended up start doing is they start adding. Dollar cost averaging, we call it. And there are times when that's appropriate. But there are times when it's like, it's just going to really kill you. Because again, let's just say the Nasdaq's starting to take a tumble. We don't know why. We don't care why. But it could be that something's getting sold, it's something it was time to turn, and somebody threw out a bunch of sell orders, etc. Still, the market's dropping. Now, if your goal is to make, because here's another factor. Okay, so first factor, have a trade plan. To pay attention to your mindset. If we're in a bad mindset, if something's really bugging us, your focus is off. And then the third is risk management. Now, the combination of the three to master, I don't think we ever really master it, but we can become good at it. We can become more controlled with it, particularly on that risk management side. Risk management is something that is absolutely vital. Number one, exponential on my moving averages, exponential. Depending on what I'm analyzing, I'm sorry, just to diverge just 1 second. What happens is that there are times when I'll be looking at a little bit longer term chart, like an hourly, and then almost on the daily. We use a simple, like on the 100 or the 200 period moving average. I use a simple. Why? Because there's a lot of big institutions that do that. Not because I'm keen on it, but just because of what they use. So I'll go along and say, I want to see what's triggering them, at least on those larger timeframes. So coming back to this, that we have our set of rules, that's our trade plan. So that's the one key factor. And some people, I keep it very simple, folks. I just got 3. I'm a day trader. I just use 3. You might have more if you're a position trader. You might have more if you're really having to go in and manage a trade. You will be managing a trade as a day trader, but you're managing it risk-wise. And do I put a moving stop? So in other words, I'm just going to raise my stop as this is now putting me in the money, and I'm like, I don't want to be giving back any money. So you have a stop and you just raise the stop along with the market. So if it comes down and takes you out, boom, you make your money and you're fine. A lot of people don't even want to do that. And it's like risk management is also very, very important. So let's say the first one is your trade plan. And let's say the second one is risk management. If you can't manage the risk, then you're afraid of the risk and you're constantly going to lose money. There are times when it'll feel like we get in a trade and it triggers my stop. I go back in a trade, triggers my stop. Now I'm down 200. Go back in a trade, triggers my stop. If we combine that with risk management, and then we realize, okay, if I'm getting in here, but I'm looking for this to run, at least following my trend line. And now what do I need to do with my risk? If If I've just put the trade on and I'm putting it on here, then I really need to realize that that's where my stop is, or my stop has to be maybe below the point of control. And third, right, by the way, understand what the point of control is and how it affects our market. And do I want to trade around the point of control or not? I'm just going to go sidetrack just real quick here. Point of control is the point where the most volume has taken place during this period of time. And you can see here on my 15-minute chart, here's the volumes. So you can see here, point of control probably will start to move because we're getting a little bit up here, a little bit greater volume, but that would be a big shift. But you'll notice over here, it has shifted. Why? Because this is where the most volume has been. If we're using a 2-minute chart, it goes back so many bars and it just picks up that volume, and that's where it's moving it to. So the point of control is where buyer and seller will exchange, will do business. And it's pretty free. You'll see a lot of trades happen right there. It's the point of control. And then wrapped around that often will be value area high, value area low. So if we get a point of control that comes down into here, what can happen often is that we trade around the point of control, and then there's enough buyers move it in, they take it up, and it goes up and it tests this one. And then if that holds, it usually can come back. And then it'll trade around the point of control and maybe go down and test the value area low and then come back. But if we're in a rising market and it has a particular reason why it's rising, well, then these will all shift. But right now, the greater volume is here. These will likely be calculated in, but we can see there's other calculations that you can use where you actually can get the volume per bar. So, and it also starts to lead you to, like, if it gets thinner and thinner and thinner, like somebody came in and they bought, and then we're done, and now we're going to start to see sellers come in, buyers are done, the market will start to drop quickly. So there's all these little techniques, all these little observations that you will pick up as you're watching, right? So again, when we're looking at that, we have our rules, gives us all the setup, right? So what's the trigger? What's the goal? Where's your stop? Those are the 3 very simple rules. I suggest keeping all of them close by. And then we can talk about the risk involved. So a good risk reward should be at least 2 to 1. So in other words, if I'm looking to make $200, I'll risk 100. That may not work really easily in the futures market. But you don't want to stray too far away from 1 to 1. And when you start getting into 1 to 2, 1 to 3, so in other words, you're looking to make 100, but you just risked 300. So you got tagged out at minus 300. And now you got to go back in and you got to make at least the 300 plus your 100 that you're looking to make on the trade. So you can see how that starts to work against you. Now you're getting gun shy. Now you're tired of your stops being hit. So what happens is you get gun shy and you have your stop in, but it's up $50, it down ticks twice, and then it goes back up and you get out. You're nervous. But then it goes all the way up to your target. But you're nervous because you keep getting hit on the stops. So what's the next key factor that kind of comes in here? Your mindset. And I took a lot of time with a good friend of mine, and his name is Richard Friesen, and we traded together on the Pacific Exchange, by the way, when we all decided to leave the floor. I came home and started trading options here from my home. Richard decided to go back and get a degree in neuropsychology, which I think is fabulous. So, and through that, he developed his current company, and it's also the name of his website, which is Mind Muscles Academy. If you're having emotional things that are really overshadowing you in your trading, I just please go check out his website. There are a lot of different things that he offers, that he has put together, programs and different things that help us work on our mindset, that help us work on our mind muscles. So together years ago, we sat and we thought, okay, what can we do each morning before trading to really kind of just get us as a trader to take a look at what could be hindering us today? And so we came up with the SET score. And what does that stand for? Sensations, emotions, and thoughts. So when you sit down and you take an honest look, for example, sensations. Are you in pain? I got a sore shoulder. I bumped my knee, or I got my head hurts. I have a headache. That is going to affect your thoughts. It's going to affect how you see things. If your head's really pounding and you're trying to look at the screen, which is flashing at you, which is going to win? So, or which is going to interfere? So, we then score each one. When we take a look at what are my sensations? What am I feeling now? Sensations in my body. Do I have nervous butterflies? Do I have a headache? Do I have, I bumped my shoulder yesterday. It just really hurts. Or you're older like me. Oh, got a little arthritis going on today. Whatever the situation is, you give it a score from 0 to +5 or to -5. If you're really a lot of pain and really hurt, you might be -3. Really, really hurt, -5. But this is all on an honesty system, because the only one that's really going to affect is you. If I'm running it and I'm talking about it in my trade room or wherever, it's like you can put down whatever you want. And you make the decision at the end. So again, so now we got sensations. E for emotions. Let's just say you kind of got into an argument with your spouse and it wasn't real nice. And it happened just as you were getting up and getting ready to come in and start to trade. Nag, whatever. Or you got some bad report from a position maybe you have or whatever. What's your emotion? I'm angry. I'm happy. I'm emotional. I'm upset. I'm kind of like, I'm really sorry that I'm feeling these emotions towards my spouse or whatever the situation is. You put a score on that from -5 to 0 to +5. Now, the last one, the T, stands for thoughts. And I expanded that to say thoughts about the market, thoughts about you in the market. You'd be surprised when you're honest enough about it. Suddenly things get revealed to you. Well, I'm afraid. I'm afraid to pull the trigger. I'm afraid of taking a loss. I have fear. I have fear of this. These all are going to come to you. They're emotions, but they're going to come to you through your thoughts, because one will trigger the other. If you have a thought, oh my God, I'm going to lose, here comes the fear. Or, oh, I just sold it, look at it run up, here comes the fear. So your thought triggers your emotion. Now, you score that -5 to 0 to +5. You add them together, divide by 3. Now, if you're coming out, +5, I probably would tell you, go back and take that again. Or if you're coming out -5, I'm like, oh, there's something really severe going on. Let's talk. But if you're like -3, +3, you get to make a choice. Am I going to trade today? I'm in pain. I'm thinking negatively. I'm doing this. Or I'm just really giddy. Am I going to miss something? Am I going to pay attention? Or you can figure out what your focus is going to have to really hone in on. But you get to make a choice. Am I going to trade my account? Am I going to trade an evaluation account? Or should I just trade in sim today? To just see, okay, how am I going to do? I still want to learn. I still want to give this a shot. And then you can, because you'll get those same emotions, trust me, when it comes out, oh, you get a chance to react. You get a chance to go, oh, what do I need to do? I'm going to close this trade. Even though I'm losing, I'm going to close this trade because my stomach just went nuts. Oh, that this pain just went throbbing. You get to see how this all interacts. So, on top of all that, those three factors, if you truly can understand those key factors and you add in, so in other words, okay, under that first one is what's your signal? What is going to trigger you? What's your trigger for the trade? But if you're using moving averages, if you're using RSI, or you're using levels from Spot Gamma or levels from somebody else, understand what the action is if that level or if that number gets taken out. So remember, keywords that I use, know what is the action. If this happens, what's the action? What's going to happen to this index? What's going to happen to this stock? If it starts to break down, how am I going to determine how far it could go? Well, that's always a challenge. I will tell you, that's always a challenge. But you will start to pick up when you learn about moving averages, when you learn about the different things. Right now, what was that? Well, I happen to follow these over here. You wonder, why has he got all these numbers? I have the $ tick, $ TIKND, and $ TIKRL. Those are tick readings. And what that's telling me is right now it's turning red. That's because there's some sellers coming in, but it's the going on the number that was there, right? When it turns green, there's 314, or what gets added to it, because you can see it's coming up from 312. So when it gets to 326, it's really just 16 additional issues are being purchased. But when you see that go back to zero or suddenly turn negative, it's telling you that's how many issues are just being thrown through the system, being sold. Now, that doesn't, we're not really sure, like one of them could be Apple, but we don't know how many shares of Apple are being showing up in the market to buy or sell. But it's giving you an indication of what's going on. Now, when we understand as well, I'm going to tell you, whatever index you're deciding to trade, learn what the top 10 stocks in that index are. All of our indexes are capitalization. So they're cap weighted. So, and I will just bring it over and I'm going to show you. And these are easy and it's free and you can get it every day. And all you got to go to is slickcharts.com. And I'm going to bring that down and I'm going to bring it over here. And now you're going to see it. Slickcharts.com, spiders, Qs, diamonds, NASDAQ, 1Q, right? Okay, that one I don't use. But these, you can see, S&P, NASDAQ, Dow Jones, and IWM. Oh, actually, it's not in there. But you can get the Russell. But in here, I can go into the NASDAQ. And now I can go down here and I'm going to go look at the companies. Aha, check it out. So what this is telling me is NVIDIA sits at the top of the food chain right now. It has the most value. It is the highest capitalized stock in the NASDAQ, sits at the top of the food chain. And what percentage is it of this 100? It's 8.69%. So it's up 4.88 times that. Times how much is it contributing to the NASDAQ being up 116? Pretty much. How much was it contributing to the NASDAQ when it was down? Pretty much. What's creating this move going up? It's now trading at 145. So it's going from being down 3 to up 5. So that's $8. Well, you can figure out the balance. Now, what am I doing on top of that? I'm adding it to my Elliott. Remember what I said this morning? Or what I said when we began? I'm looking for that if it's going to come down. What I want to see that's going to give me ground to stand on, that wave 2 is done and that wave 3 is starting, because if wave 3 is going to start, it needs to blast and not stop. It did right there, fine. But then it kept going and it pulls back, fine, because that's the natural movement of a market. You go up, you pull back, you go up, and now look what it's doing, heading for the stars. So this morning we touched 20,382. We're getting ready to touch 20,757. Quite a nice move. How do you want to play it? Well, I can confirm that that likely was the bottom, so I'm going to start playing it from the long side. I'm looking for buying opportunities. Yep, if you're a scalper, you get to scalp that. But if you're playing the market and you want to leave orders in, you're going to be looking to play the moves, play the upside. That's the bias. After we hit that low, and we got proof that, yep, we're turning. Now you can get an idea why. NVIDIA sits at the top today because of their earnings tomorrow. Also, they are going to have the control over what the market's going to do not only Wednesday afternoon, but Thursday and likely Friday. And so what's going to follow? Apple, Microsoft, Amazon, Broadcom, Meta, Tesla, blah, all the way down. So what are we all waiting for? We're waiting for NVIDIA's earnings. And we now know that they're going to carry some weight on this whole thing. And now you can see how much. It's like there'll be a day where you're like, wow, why they're just whacking this thing that's going crazy. You can come over here to slickcharts.com and you can see hitting. And you can go, you can go to all the different ones. I can go here to the Dow Jones and go look at the companies. There's only 30. The Dow Jones, by the way, the pre-opening this morning was down 400, was down over 400. Now it's only down 60. That's a big turnaround, down and back. That's a big turnaround. So, but we can see, oh, what was taking it down this morning? United Healthcare, still there. It sits at the top of the food chain in the Dow Jones because it's so huge. And then Goldman Sachs. Why? Because it's so huge. So that's why this is not zipping along like here. Because the big difference is, I mean, we can go back over here. We can go to the S&P 500, which has got 500 stocks. Guess what? Understand that the S&P 500 is truly controlled by tech. And it's truly controlled by the Mag 7. Apple, look at the top 7 stocks. Apple, NVIDIA, Microsoft, Amazon, Meta, Google, and Tesla. So when they all decide to move together, guess what? So is the S&P. Now you get all that, so you got your information. Now you get to add different things, and that would come, and I would love to show it, but I can't because I don't own it. But we have a breakdown every day. I get it because I subscribe. But I can get and take a look at where these levels are, and then I can look at the Qs. The Qs are trading at 503. Well, I can tell you at 500, which is now gone through, was the largest gamma position. The largest one was sitting right there. They've taken it out. Ooh, what's happening? They're having to buy the NASDAQ because they've taken it out. So adjustments have to be made. And if it was short, they gotta buy or cover or get out of the position. So these are, did it really? When did that happen? I'm being told that NVIDIA has now joined the Dow. That's a really great question. The guy Joe Shai is asking me, what type of catalyst events make the 493 other tickers react stronger than the top holdings? It could be an earnings report. And there are times when geopolitical situation, and for example, it's like if we're just looking at the Dow, the top one on the Dow is the United Healthcare. If anything's coming in with insurance, it's affecting insurance companies. United Healthcare will tank, and therefore everything else doesn't make any difference. But your question is like, if we're looking at the S&P, and if the top 7 are really in control, what catalyst could really get the other 493? Well, we have to also understand that it's like there are a lot of tech stocks in the S&P 500. There are a lot of pharmaceuticals. There are a lot of stocks right now that are intertwined with artificial intelligence, pharmaceutical stocks. We have a lot of stocks that are just wrapped around a lot of different sectors in our market. Yes, yes, yeah. Oh, and is that now in place? Oh, that's interesting. Where's my, I don't know where I put it. My one thing. Really? Wow. Wow, wow, wow. Okay. So that helped push the Dow down this morning. Good to know. Thank you so much for that information. I knew, in the back of my mind is going like, yeah, well, you knew that because somewhere I had read or I had heard that NVIDIA was going to replace Intel. And guys, I'm old enough to know when Intel ruled the chip market. Ruled. We had Sun Micro and we had Intel. And they were both stocks on the option stocks on the Pacific. And Intel, always big. Anyway, thank you. Thank you for that information. So that is going to be really interesting because now we really should be, come on down. You need to kind of get out. But right now, let me go back to that. Let me see where did I do with that one? Hold on just a second. There it is. Let's go over and let's bring that back for just so we got the time. And then I'm going to wrap this whole thing up. Let's go back over to the Dow, go to the companies and see where they're putting it. They're not giving it much. It should be above Apple, right? This is a cap weighted NVIDIA. There it is. Number 22. Wow. That's amazing. That's amazing. I guess we'll find out, tomorrow to get reassessed again, right? Puts out its earnings, its capitalization, it's all redone. But the Dow is a cap weighted stock index as well. I'm surprised it's down so low. Because it's saying that the capitalization of Boeing is higher than NVIDIA. And right now, NVIDIA, and I don't know the exact number, but they're neck and neck with stocks like Apple, with companies like Apple, I should say, and etc. But you know what? I shouldn't say stuff like that because I also was reading the latest stocks that what was he saying? Who, me? I'm not sure what you're making a reference to. But I did read this morning that, Warren, I actually heard it last night. Warren Buffett has invested in Domino's and Pool Inc. I'm thinking Domino's. Gee, you eat a lot of pizza? And then I went and look up at Domino's. Domino's. Do you know that stock is $435? So, yes, yes, Domino's, a pizza. It's the largest pizza chain in our country. Okay, maybe even the globe. But does this kind of ring true that at some point what Warren Buffett is saying and other people are saying is that the markets are becoming overvalued and have been overvalued for quite some time? So when we talk about earnings and we talk about what they really, okay, now we're just being told that billionaire Stanley Druckenmiller sold all of his NVIDIA shares. Okay, well, maybe he's just happy with his profit. I don't know, but I don't want to take that as a bad omen. But who knows? But just back to overvaluation. And again, when we're really looking at just evaluating a company and just how things can just keep going and going. And understand that the amount of money, here's the other factor that kind of goes in when we're looking at, call walls, put walls, and just all the things that come out through options trading. The biggest one being capital flows. Remember what I said? It's like we have all these ETFs and derivative ETFs and all the different things combined. How, when they start a new ETF, does it suddenly it's got a 50 million, a 250 million, a $500 million valuation? Because there are large corporations, there are large trading firms that have that kind of money. And there's still so much money in our markets. Trillions of dollars. We can look at Forex all by itself. Trillions of dollars are traded every day in the Forex markets, but trillions of dollars are now traded every day in our equity markets, in our options markets, in our futures markets. So what happens when some of that money gets drained out? The winners get to take it home. The losers get to go back to go. So I am going to kind of wrap this up. Domino's Pizza is actually a tech stock. I love it. Thank you, Olga. Thank you. Domino's Pizza. I'm being told it's actually a tech stock. I know. But see, I just tell you, when I interact with you guys, I always learn something new. And that one was a good one. I thank you. Thank you. Olga Kist gave that one to us. So that was good. Anyway, I'm going to kind of wrap it up. So again, just to kind of put it all together, 3 key factors. You want to be a day trader? It's not the hardest thing in the world. Most of it, you're going to have to get over your own mindset. I will give you that. A lot of fear gets creeping in, a lot of, losing money, because a lot of people are coming in to become a day trader because they get the gist of that you can make a ton of money quickly. You really can. But what they're really going to be looking for is consistency. So if you come in and you want me to trade together and you want to learn things, I'm going to say, you know what, if you have a day where you kind of make $1,000, you're welcome. If you want to make $1,000, then great. Consider it luck. And so, or consistency. What's your goal for the day? I'd like to make $200. I'd like to make $300. Do you realize if you make $300, then each week you're making $1,500 minus your commissions, but $1,500? So you can figure the balance out, right? That's $6,000 a month. And you build from that. So instead of having to I got to have this big winner, I got to make my $1,000, I got to do this. Understand what's propelling you to come in and you want to make quick money. A lot of people, it's because they've accumulated debt. A lot of people because they've fallen on some type of a hard time. A lot of people, maybe they lost their jobs and having trouble getting back into the marketplace, but they need to make money. Well, it's possible, but you got to leave the emotional stuff outside. You got to leave this pressure of I have to have. So at some point you have to realize you better have some income so that you can continue to pay your bills and pay your mortgage or your rent or your utilities, whatever you need to pay, you got to pay, because this is going to take your time and it's going to take all of your mental energy. Any trading, it's going to take your mental energy. But this is something else that I tell people, and then I'm going to stop, that whatever you do, understand that the money that you have in a savings, in a 401k or whatever, it's your money. Don't give control of your money to somebody else. Make your decisions yourself. Somebody else might handle it, and you can tell them that, thank you. You can tell them, this is what I'm interested in. But if they come back at you and say, you're like, you know what, I'm a little uncomfortable sitting long right now, blah, 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 then, you can go and say, they say, well, you're in it for the long haul. You say, okay, close the account. Doesn't work. Everything has a top, everything has a bottom. You're welcome. Thank you. And by the way, thank you guys. This was very enjoyable. Oh, mindmuscles.com. Mindmuscles.com. And the SET score, that one, just come and visit me. And yes, that's correct. So yes, and David, you're going to already put up my email address, my websites, and please feel free to email me, talk about that. You heard me on this particular program, and we can go from there. And I didn't get a chance to talk about what's coming up, and I'm going to stop. Next person's up. Thank you, David. Thank you, everybody. Have a great afternoon.